Hey guys, welcome back. So originally I have a topic that I planned to talk about, but this week there has been some financial news coming out. I thought it's worthwhile to have a discussion on it first. So for this week, I want to try something different. Instead of talking something that's planned, I wanted to kind of do a summary of some important financial news that I think we should be paying attention to. Now, this is going to be something new, so let me know in the comment below if you like these kind of style where it's a lot more current event. And if so, maybe in the future, I can have another series where I talk about weekly important financial news. So for this week, the two major news I want to talk about is there's a developer in Ontario spending $1 billion to buy a lot of single houses and turning them into rental. I want to discuss about this because I think it's very important and what it means for our housing economy in the future. And also number two is the inflation data coming out from Canada and US, and what does that potentially mean for us in terms of investment and also housing market. So without further ado, let's jump into today's video. So first, let's talk about the news that a developer is spending $1 billion to buy single houses. Now, I'll be reading out some of the details that is reported from the Globe and Mail article. I've linked the article in the description below. If you want to read the full thing, you can read it, but because it's so long, so I'm just going to pick out the important parts of it. So basically, the article is saying that the Toronto condo developer is buying hundreds of detached houses in Ontario. They're building a large-scale single-family home rental operation and an proven business model in Canada. And then the article goes on further and say that institutional house rentals have become highly lucrative in the United States. Core founder Corey Hartin and Executive Vice President Farron Latafat questioned why there wasn't a similar business in Canada, which has had the rental vacancy rate below 3% since the turn of the century. And then skipping forward in the article, Core is targeting 8 mid-sized cities in Ontario, and this year started buying properties in Kingston, St. Catharines, London, Barrie, Hamilton, Petersburg, and Cambridge. It will soon start buying in Guelph. Its medium-term goal is to have $1 billion portfolio of 4,000 rental units in Ontario, Quebec, BC, and Atlantic Canada by 2026. Now, moving on in the article, Mr. Harden said that Core's rental unit will provide affordable housing for families and residents who do not want to live in small apartments. If this project succeeds, it can spur major investors to follow suit. So this is something that I'll talk about later, but I don't buy this at all. I don't think it will solve anything. In fact, I think it will make it much worse, but we'll discuss that after the article. Now, in the article, a company called Tricon, who has been doing the same thing in US, have commented that this strategy may not work as well in Canada as opposed to US. And there are several points to his argument. Number one is housing in Canada is a lot more expensive. And number two is that Tricon have owned 24,000 detached homes in 18 major cities. They're mostly warm climate cities like Orlando or Phoenix. And he's arguing that this kind of climate is better for the rental market, which doesn't apply to Canada because we have harsh winter in most places, so repairing cost is going to be significantly higher. Now, at the end of the article, which I think is one of the most important points, it says that Core is trying to build scale and is buying houses within 15 minutes of each other to form a cluster of about 50 properties or 100 rental units in each city. This, I think, is going to be very, very important, and I will be talking about that as well. Alright, so let's talk a little bit about this. I think this is absolutely ridiculous. Regardless financially it works out or not, I hope it doesn't. This creates a huge problem for the housing market for everyone else moving forward. Now, as the article suggested, this is well known in the US already ever since 2008, the Great Financial Crisis. There is actually a term for this kind of project. It's called financialization of housing, where a corporation treats housing as an investment tool instead of a social necessity. Now, even though this has been going on in the US, I believe that if this were to go forward in Canada, the result is going to be much worse for everyone else compared to US. And the main difference is the housing market condition. So I've gone through several reports, and here I'll outline what are the major factors that make our market so different than the US. So the first report I want to cite is from TD, and here they outline several major factors. Now, the first one is population growth. Now, even though US population is roughly 10 times of Canada, in terms of population growth, Canada has been beating US for past several years. And the main reason has been international students. And that's because our government pushed for immigration a lot harder than the US government. For example, if we look at COVID, and in the article it has quoted, since the pandemic struck, the government turned its attention to granting permanent residency to those already in Canada. the Canada Experience Class program, which provides a pathway for temporary workers or international students to permanently settle in Canada, barely skipped a beat, admitting 25,000 people last year, broadly in line with 2016 to 2019 average. Now, the second factor that makes us very different is there's actually no decline in our housing price in 2008 when the market crashed. So because of the subprime crisis, the US market has dropped an average of 12% in 2008. But for us, we barely dropped anything. For us, the peak drop has been 0.5% only. So because of this, Canadians have experienced a much larger feeling of FOMO, fear of missing out, than the US homeowners. So that forces new homeowners to jump in the market much earlier than anticipated or when they're ready. And when that happens, that greatly increases the demand, and that makes our supply unable to keep up. Now, speaking of demand, that leads us to the third factor that TD listed is looser mortgage rule. So in the article, they quoted that according to Senior Loan Officer Survey data, mortgage lending conditions in the US was tightened to a greater degree relative to Canada last year. So even though we have the mortgage stress test to somewhat get the lending under control, compared to the US, our rule is still a lot more relaxed according to the article. So that allows people to borrow more, have more room to bid, and that pumps up the price even more. Now, the difference is not only on the demand side, but also on the supply side. So quoting another research by Will Dunning, which is an economic researcher on the Canadian housing market, he has published a research last month named Not Enough Places to Live, focusing on the supply issue. So looking on the screen, his research showed that Canada has been going through a deficit in housing supply almost every year. But if we look at the detail, not all properties was as a deficit. The major deficit actually come from single housing unit. Now in the report, it goes into a lot more detail and show you different data. So I've linked the report in the description below, but he has basically concluded that there are several reasons for such a big deficit in housing supply. Slower approval, physical limitation, either naturally or artificially. So for example, the green belt zoning around Toronto, or delayed installment in the infrastructure. Now speaking of infrastructure, this brings us to the fifth factor, which is poorer infrastructure compared to the US. And this is actually something that we discussed before when I was talking about why housing is so expensive in Canada. And one of the key points I argue is infrastructure. So looking at Singapore, infrastructure is one of the main reasons that Singapore is able to keep their housing price under control. When public infrastructure as well as highways are well connected, living further away from your work is not going to cause you any issue. It's just going to be as efficient as if you're living in the city center. So this helps population to scatter more, but because our infrastructure is poor, thus driving up the demand in a single location. Now I know work from home have changed this narrative somewhat, but nevertheless, this has been the problem for the past 10 or 20 years, and I don't see most offices staying as work from home once everyone is vaccinated. I bet majority is going to start demanding their worker to return to the office, which very likely we're going to go back to the same problem. So with all that combined, this is what makes our market a lot more imbalanced compared to the US market. And so in the article, when they said that this move can potentially solve the rental problem, I think it's complete crap and I don't buy it at all. So in the article, they said that they're buying 2,000 single house units, splitting them up top and bottom, thus producing 4,000 rental units. Their 2-bedroom basement suite is going to be going for $1,600 a month on average. 3-bedroom above is going for $2,100 a month on average. Now, if we compare it to the average rent of all the 2-bedroom apartment in Ontario, according to the article, the rent they're proposing is above the average, even though yes, you do have a garden in front or in the back because it's a house, but still the price is higher. Now, another argument could be saying that, well, we're buying up all these houses, so we're renting them out, so the rental supply is going to increase, and that's how we can help the market. But think about what you're taking away in return. You're taking away 2,000 plus single family units that could be owned by other regular home buyers. So first-time home buyers have it hard enough already. I've talked about this many times. They are truly being left behind because of how much home prices are going up in compared to their salary. So now they have to compete with a $1 billion developer that is going to outbid them no matter what they offer. Now, I do understand they're saying that most of these homes are rental houses in the first place anyway, but still, my problem is not about buying things and renting out. My problem mainly is about what type of property you're buying. Because there's nothing wrong with rental business. In fact, I think rental business is essential to sustain the rental supply that we need in the market. But I think it will only actually help if today you are buying all these lands and maybe you're combining them and you're building a large rental apartment building to be rented out to other people. And now you're able to house a lot more tenant on the same parcel of land. But this is not the case. We're not redeveloping. We're still renting out single houses, which at most in the same parcel of space can probably only house 20 different families. Now, also one last thing is at the end of the article, they said that they're looking to buy 50 properties or 100 rental units that is very close to each other and kind of cluster them to form a rental kind of neighborhood. I would actually recommend a documentary called Push that discusses these kind of problems that's been going on in society in different cities. So in there, they talk about the trend of developer coming in, buying up all the land, buying up all the buildings, renovating, and then pushing the existing renters out because they can no longer afford the increased rental price. And Toronto was one of the cities that they talked about in the documentary. It's a fascinating documentary. I linked it in the description below. So if you're interested, take a look there as well. And what is worse is if this actually works, it might trigger and attract other companies to follow suit and do the same thing. Now, I really hope the government can pay attention to what is going on here and potentially intervene, even though I'm not sure what kind of rule, what kind of law they can trigger to do such thing. But meanwhile, for us, average citizen, what we can do is if you're not happy with what is going on today, email your MP, let them know you have this concern, and hopefully with enough people calling attention to this issue, they can really take a look and have a discussion on this. Moving forward, let's talk about another big piece of news, which is the inflation data from Canada and US. So Canada and US inflation data for May came out this week. Canada CPI rose 3.6% compared to May of 2020, which is the highest increase in a decade. Now the screen here will show that the annual inflation is going to be different from different categories. Some has risen a lot more than others. Now, many is going to look at this and say, well, it doesn't seem to make sense because the year-to-year inflation is only 3.6% according to the report, but my housing cost, my food cost has gone up so much more than what this report is showing. Now, this is going to be something we'll discuss in another video where I'll in detail talk about what is inflation, how it's calculated, and how come sometimes the numbers don't really apply to our daily lives. But for the government, they're looking at this report and they're working with a 3.6% annual increase. Now, on the other hand, US have reported a 5% annual increase or 3.8% if you exclude food or energy, which are volatile pricing index. But if you include everything, it's 5%. But no matter what, both governments have continued to downplay the inflation. Both have stated that they're not easing their bond purchase and will maintain interest, and it is to stay at this level for rest of 2021, likely 2022. So now the next key is during the summer, as economies open and we are returning back to normal, supply is supposedly to increase. Will the inflation die down? If it does, then it can prove that maybe the government is right, it is transitory. But if it doesn't, then maybe the inflation is real and it's here to stay. Now, in terms of commodities, because of earlier inflations, it has risen to a high level. But recently, for example, lumber has fell massively. So on the chart, you can see that it has fell over 30% for lumber futures already. Now, inflation expectation and numbers do put pressure onto the stock market. As we saw in April and May, the market is very fluctuating and have dropped in some days because of fear of inflation. But the recent month have suggested that the investor seemingly is rotating out of value stocks and going back into tech. Now, in one of the articles, Alec Young, Chief Investor Officer at Tactical Alpha, outlines the reason why this is happening. So in the first half, basically you have people expecting strong reopen, bond yield to increase, inflation will be a huge issue, and this is why value stocks have gone up so much. However, as things play out, only some of these things were true. Reopen was indeed pretty strong, but bond yield has not went up, instead it have fell. And what that means is investors either believe that inflation is transitory, or they do believe that second half of the year is top in earning and growth. Earlier in the year, strong open, value stocks like banks, industrial, energy can leverage these strong performance to show better numbers, and that's why their stocks are going up. However, the key issue is that the cycle right now has been greatly compressed, so it's happening much faster than the usual economic cycle, thanks to all the stimulus. So now looking at all the options, investors could be saying that growth stocks in comparison still offer a more reliable return than value stocks because it is less dependent on surprises of this economic cycle. So if you're managing your portfolio, you want to pay attention to this potential rotation. Now in terms of housing market, if lumber have dropped this much and continue to drop, I hope this becomes attractive for developers or home builders to look at building single detached homes again because the cost is much lower and can help us in our future housing supply. But I still think during the summer it's going to be quite volatile because there's still going to be a lot more news coming out and some of them can really surprise the market. So make sure you read more, research more, watch more to really get a better sense of what is going on in the market this year. Now speaking of watching, I do upload these videos every Tuesday 8:30 EST, so if you like them, make sure you like and subscribe to my channel, click the bell button to get all the notifications in the future. And also in the comment below, let me know if you like this kind of style of presentation and what you think about these two news. Alright, this is Jacky. I hope you found this interesting. I'll see you next week. Bye!